Welcome back for another deep dive. This time, we're going to tackle, I guess, a pretty big topic, the U.S.-Europe alliance.
Mm.
Specifically, how a potential second Trump term and the war in Ukraine could really shake things up. I know you sent over some pretty thought-provoking articles on this, and, well, I know you're particularly interested in this as a Forex and gold trader.
Absolutely. Yeah, I'm always looking for those early warning signs, the subtle little things that can signal some big moves in the market.
Yeah. Well, the article we're diving into today, I don't think it has any hot stock tips for you.
Okay.
But it does take a deep dive into, all those historical and political currents that could really rock the boat,
For sure.
so to speak.
Yeah.
And that, I think, is really where the value lies for you.
Absolutely. Understanding those underlying forces that really drive market sentiment is so crucial,
Yeah.
especially when you're dealing with things like gold and currencies that are so sensitive to what's happening, globally.
Yeah, for sure. So let's jump right in. This phrase that the article uses, rules-based order. What does that even mean, and why is it relevant to this deep dive?
Yeah, so it's basically referring to that whole network of treaties and institutions that were established after World War II to kind of like govern international relations.
Okay.
It's kind of like the bedrock of global stability.
Yeah.
Things like the UN Charter, NATO, and the agreements that, led to the EU and the World Trade Organization,
Right.
all aiming to promote cooperation, prevent conflict, and, foster free trade.
Gotcha. Okay, so the article makes this argument that this whole rules-based order is more resilient than we might think, even with someone like Trump at the helm.
Yeah.
You'd even call some a necessary corrective.
Mm.
And I got to admit, that raised my eyebrows a little bit.
It's definitely a provocative claim.
Yeah.
But, the author seems to argue that Trump's actions, all that disruption, especially, his skepticism of multilateralism and the whole America first rhetoric, it's kind of like a reaction to what they see as excesses in, global governance.
So they're saying it's like a rebalancing of the scales, even if it's a little messy.
Exactly. It's like a pendulum swing,
Yeah.
like a correction to what they see as drifting away from traditional U.S. foreign policy, which has always had, historically, those strong isolationist tendencies.
Interesting. And that brings us to NATO, which, has been like a cornerstone of the transatlantic relationship for decades.
Yes.
The article really focuses on Article 5, that collective defense principle that says an attack on one is an attack on all. But then it mentions this detail about how the treaty was worded, something about the U.S. insisting on specific language.
Yeah, this is fascinating. The U.S., they champion this whole idea of collective defense, but they also wanted to make sure that each nation had some flexibility in how they actually respond if an ally gets attacked. So the language in the treaty doesn't actually mandate specific actions. It leaves a lot of room for interpretation.
Oh, so it's kind of ambiguous.
Yeah, and as you can imagine, that has huge implications for how the alliance actually functions, especially during a crisis.
Okay, I see where you're going with this.
Yeah.
So let's bring it to the current situation in Ukraine. The article makes this point that Trump doesn't really seem to see defending Ukraine as a vital U.S. interest, even with, all the talk about potential Russian expansionism.
Right, and this is where things get really interesting, especially from a financial market perspective.
Okay,
The article suggests that Trump's stance on Ukraine, although it's controversial, it aligns with this historical pattern of the U.S. being reluctant to get involved in European conflicts unless they're directly threatened.
So again, that pendulum swing, that shift away from, being involved everywhere in the world, towards more of an isolationist approach.
Exactly, and the author is saying this historical context is super important for understanding how the U.S. might act on the world stage, which, obviously has big implications for global markets, including, Forex and gold.
Right. Now, there's another part of the article that really stood out to me. It's about Trump and J.D. Vance and how they treated Zelensky. I have to say that part made me kind of cringe.
It's definitely a striking example of Trump's, unconventional style. Some might even say undiplomatic.
Yeah.
But it's important to remember that the author is trying to explain why the U.S. has the foreign policy. It does not necessarily condone that behavior.
Okay, that's a fair point.
Yeah.
But here's where I really did a double take.
Yeah.
The article compares Trump's approach to Ukraine to, wait for it, Roosevelt's reluctance to enter World War II and his dealings with Stalin.
Wow, that is a bold comparison.
Right.
But if you zoom out and consider that broader historical context, it actually kind of starts to make sense.
Okay.
The author is highlighting that cyclical nature of U.S. foreign policy, that back and forth between interventionism and isolationism.
So they're saying that Trump's actions, as jarring as they might seem to some, actually fit into this broader historical pattern?
Exactly. A pattern that could have significant implications for how the U.S. engages with Europe, and by extension, how global markets react.
This is getting really interesting, right? Already starting to see how this historical perspective could be super useful for a Forex and gold trader, trying to navigate these crazy times. Let's dive deeper into those historical parallels and see what they might reveal about the future.
Okay, sounds good. So, that comparison between Trump and Roosevelt, while it might seem strange at first, it does highlight some interesting parallels in how they approached foreign policy. Both of them, they exhibited this degree of isolationism. They were really prioritizing domestic issues over foreign entanglements.
But Roosevelt, he eventually led the U.S. into World War II, right?
Yeah.
So how does that fit into this whole isolationist thing?
Well, Roosevelt's entry into the war, it wasn't some foregone conclusion. He faced a lot of pushback from isolationist groups within the U.S. And initially his approach was one of, cautious neutrality. He only fully committed to the war after the attack on Pearl Harbor, a direct attack on U.S. soil.
So the article's saying that Trump, just like Roosevelt, might only be willing to get involved in these foreign conflicts if the U.S. is directly threatened.
Exactly. And, this cautious approach has implications for how the U.S. might respond to what's happening in Ukraine right now. While the article doesn't explicitly say it, you kind of get the sense that Trump might be less inclined to intervene militarily unless Russia does something that directly threatens NATO territory or, some vital U.S. interest.
Okay, I see. I'm starting to see how this historical perspective could really inform a Forex and gold trader's outlook. Like, if the market thinks that the U.S. is less likely to intervene in Ukraine, how could that impact currency values?
That's a great question, and it really gets to the heart of how these geopolitical events can impact financial markets. If investors believe the U.S. is pulling back, they might see the euro as more vulnerable.
Vulnerable? How?
Yeah.
Like, would it weaken against the dollar?
It's definitely a possibility. If there's a perception that the U.S. isn't supporting Europe as much, that could lead to less confidence in the euro. Investors might shy away from it. This could then, cause the euro to depreciate relative to the U.S. dollar.
And what about gold? We always hear about gold being a safe haven asset during times of uncertainty. Would this shift in U.S. foreign policy, towards isolationism, would that push investors towards gold?
It's definitely worth thinking about. Historically, gold has been seen as a way to hedge against geopolitical risks and economic uncertainty. So if investors feel like there's a greater chance of conflict or that alliances are weakening, they might flock to gold as a safe haven, and that could drive up the price.
This is all making a lot more sense now. So for our listener, the key takeaway is to really pay attention to what the U.S. is saying about its commitment to Europe, especially when it comes to supporting Ukraine. Any signs of, wavering or moving towards a more isolationist stance could have big consequences for the Forex and gold markets.
Exactly. And it's not just about the big announcements or military actions. Even subtle things like changes in what they're saying, their trade policies or diplomatic moves, those can all offer clues about where U.S. foreign policy is headed. And those clues can be super valuable for a trader.
This reminds me of something else the article talked about, the idea that the U.S.-Europe relationship isn't this perfect union, even during World War II. The Grand Alliance, as they called it, even they had their own tensions and competing interests.
That's right. The article points out that the Grand Alliance, even though they were united against Nazi Germany, it was kind of a marriage of convenience, held together by this common enemy. Once that enemy was gone, the cracks started to show, and that led to the whole Cold War division of Europe.
So they're implying that even if there isn't some big dramatic break between the U.S. and Europe, there could still be this gradual drifting apart, a realignment of interests, and that could have a huge impact on the global balance of power.
Exactly. And for someone trading currencies and gold, understanding these little shifts is crucial. It's not just about, predicting whether or not the U.S. will get involved in Ukraine. It's about understanding how strong the transatlantic partnership really is and how that might translate into, market sentiment and price movements.
As we're talking, I'm starting to think about the implications for other currencies, too.
Yep.
We've been focused on the euro and the dollar. But what about the currencies of countries that are closer to the conflict in Ukraine?
That's a great point. The currencies of those countries that border Russia or have strong economic ties to either Russia or Ukraine, they're likely to be even more sensitive to what's happening in the conflict. Their values could really fluctuate depending on how things play out and how investors perceive the risks.
This is all incredibly insightful. I'm seeing the whole world of Forex and gold trading in a totally new light now, where history and geopolitics play a central role. It's not just about charts and technical analysis, it's about understanding the forces that shape global events and how those events can create trading opportunities.
Exactly. And I think one of the big takeaways here is that risk and opportunity often go hand in hand. These periods of geopolitical uncertainty, as unsettling as they can be, they can also create unique opportunities for traders who can anticipate those shifts in market sentiment.
Which brings us back to that whole idea of Trump being a necessary corrective. I'm curious to hear your take on that. Do you agree with that assessment?
It's complicated, and it definitely sparks a lot of debate. You could argue that Trump's approach to foreign policy, as disruptive as it's forced everyone to rethink some long-held assumptions about the U.S.'s role in the world and its relationship with Europe.
So, in a way, he's kind of shaken things up and made everyone reconsider the terms of engagement.
Exactly, and that could lead to a more balanced and sustainable partnership in the future, one that's less reliant on these outdated Cold War structures and more responsive to, the realities of a multipolar world.
But on the other hand, his methods, they've been criticized for being unpredictable and destabilizing, potentially undermining the alliances that have kept things stable for decades.
That's true. And we don't know for sure whether the potential benefits of his approach will outweigh the risks and damage that have been caused along the way. It's a delicate balance, and one that traders need to pay attention to because it could have a big impact on the global economy and financial markets.
This has been an amazing deep dive. We've covered so much, from the rules-based order to NATO, from Roosevelt to Trump. I feel like I have a much better understanding of all the forces at play.
And we've only just scratched the surface. There's always more to learn, more connections to make, and new insights to uncover.
Wow. It's amazing how stuff that happened so long ago, these historical events can have such a big impact on what's happening in the markets today. We've really gone through a lot. The rules-based order, NATO, Roosevelt, and Trump. I feel like I understand what's going on so much better now.
Yeah, that's the thing about history. It really gives you this lens to look through to see what's happening now and maybe even predict some future trends. And for someone trading Forex and gold, that historical perspective can be super valuable.
Totally. So let's try to break this all down into, actionable insights for our listener.
Mm-hmm.
What are the key things they should be thinking about as they navigate these uncertain times?
Well, I think the most important takeaway is that U.S. foreign policy goes in cycles. We talked about how the U.S. has gone back and forth between getting involved in everything and then pulling back. Recognizing where we are in that cycle right now, that can give you some clues about how the U.S. might react to global events, both now and in the future.
Right. And that goes back to what the article said about Trump being a necessary corrective. Whether or not you agree with that, it's pretty clear that his presidency changed how the U.S. approaches foreign policy, more transactional and less involved in the world overall.
Exactly. And for our listener, that means paying close attention to anything that might suggest a further shift towards isolationism. That could mean a bunch of things, like cuts in military spending, pulling out of international agreements, or even just a change in the way they talk about the U.S.'s role in the world.
So it's not just about watching for big events. It's about picking up on those subtle changes in policy and sentiment that could signal something bigger.
Exactly. And those subtle shifts can have a real impact on the Forex and gold markets. Like we said, any sign that the U.S. is backing away from Europe or that the relationship between the U.S. and Europe is weakening, well, that could cause the euro to drop and people might start moving their money into safe haven assets like gold.
And this is where those historical parallels we discussed really come into play. By looking at how markets reacted to similar shifts in the past, traders can get a sense of how they might react now.
You got it. History might not repeat itself perfectly, but it often rhymes. Recognizing those rhymes can help traders predict potential market moves and, adjust their strategies.
As we're wrapping up, this thought just popped into my head. We've talked about those cycles in U.S. foreign policy and this potential move towards isolationism.
Mm-hmm.
But what if things are different this time around?
Oh, I like where this is going. What do you mean?
What if everything that's happening in the world today, those driving forces, they're so different from what shaped things in the past that those historical patterns, they don't apply anymore? What if we're in uncharted waters, a whole new era where old alliances fall apart and new power dynamics emerge?
That's a fascinating idea, but kind of scary too. If that were to happen, then all bets are off. Historical precedent wouldn't be much help, and the financial markets would likely become even more volatile and unpredictable.
It's exactly. It's something our listener as a Forex and gold trader really needs to think about, because in a world where the old rules don't work anymore, being able to adapt and see those new trends coming, that's going to be more important than ever.
Couldn't agree more. And I think that's probably the most valuable thing to take away from this deep dive. It's not just about understanding the past, it's about being ready for a future that could be completely different from anything we've ever seen.
This has been such a thought-provoking conversation. We've covered history, geopolitics, the complexities of the financial markets. I hope our listener found it as insightful as I have.
It's been great exploring these complex topics with you. And to our listener, keep asking questions, and don't be afraid to challenge those assumptions, because in a world that's always changing, the best asset you can have is a curious and adaptable mind.
Well said. Until next time, keep diving deep.